All right. Welcome everyone. I hope you are doing well. Let me give you few instructions. We are going to start practicing MCQs and we shall be doing these questions in due course of time. Each question time will be of 3 minutes. I will show you a question on my screen and you have to solve at your own. And after 3 minutes time, we will start discussing and you have to check whether you perform correctly or not. Believe me, this session is going to give you a lot of practice and revision to the entire tax areas. Till the time you have learned a lot, you have practiced by yourself, but these MCQs are going to revise your entire tax syllabus, inshallah. And the participants who are just joining the meeting, they are requested to have a pen, paper, and a calculator with yourselves. And now I'm going to share my screen. Here we go. We have this scenario in front of us, and the following scenario relates to 5 questions. And here is the first question: on what figure will Richard's additional living accommodation benefit be calculated for the tax year 23-24? For the fiscal year 23-24, we have to find the amount on which the additional accommodation benefit will be calculated. I would appreciate if you start reading the scenario and select your appropriate answer. Basically, we need to find the figure on which the additional accommodation benefit will be calculated. First question is pertaining to the first paragraph of the scenario. And by the way, examiner is not asking you whether cost or market value will be used in the calculation. No, it's not like that. Examiner is asking you on what figure additional accommodation benefit will be calculated for this year. Examiner is not asking you to select whether the cost will be used or market value will be used. Examiner is not asking this thing. Samra, your answer is correct. Time up. Okay, the participants who have not shared their answers, please consider this as incorrect. So if you have not shared your answer in due course of time, please mark this answer as incorrect. Although if you have solved the question and if you have selected anyone, but if it is not shared, so consider it for yourself as incorrect. Okay, I'm starting. Living Richard's employer provide with the following benefits. Living accommodation since 1st June 2020. The property was purchased on 10th May 2013. First of all, the difference in between these two dates is more than 6 years. And this property was purchased in May 13 for 162,000, which is more than 75,000. So that is the reason the purchase cost of the property is more than 75,000. This is the reason for calculating the expensive accommodation benefit. But on which value it will be calculated, let's decide. And the market value of the property was 198,000 on the date when it is given to employee. On 1st June 20, the market value of the property was 198,000. Improvements costing 7,000 were made to the property during November 17. If you remember, for the calculation of expensive accommodation benefit, we need to select any one of these cost or market value. And this depends on the 6-year rule. If the property purchase date and the date when it is given to employee is more than 6 years, in that case, we would be taking the market value in the calculation. So I'm writing the market value in the calculation. But that's not the answer. Majority of the students shared their answer as option A, but that's incorrect. Why? Although market value will be used, but on this 198,000, expensive accommodation benefit will not be calculated. How? From the market value or the cost, we deduct an amount of 75,000 and differential amount. That X amount was asked in the question. And the difference of with these two is 123,000. So basically 123,000 is an amount on which expensive accommodation benefit will be calculated. So your correct answer is C. If examiner asks you that which value to be used in the calculation, cost or market value, then you will say that market value will be used. But examiner has asked you that on what figure this benefit will be calculated, so that is the figure on which expensive accommodation benefit will be calculated. So correct option is option C. And by the way, if you further calculate that what are the next step for the calculation of expensive accommodation benefit, so this difference will be multiplied with the official rate of interest, that is 2.25%, and then it is month apportioned, that for how many months the property is used for living purposes. So final amount will be the accommodation benefit, the final amount will be the expensive accommodation benefit. So this is the answer, that on 123,000 expensive accommodation benefit will be calculated. So I would appreciate if you please give me your quick feedback whether now you are clear on this. The students who selected answer A, they were incorrect. Why? Because examiner has not asked to decide whether the cost or the market value will be used. Rather, examiner has asked that on which amount the expensive accommodation benefit will be calculated, and that is the amount on which expensive accommodation benefit will be calculated. Good enough to know that you guys are now clear on this. Let's move forward, and let me show you the next question. Next question is, what is Richard's taxable benefit in respect of the interest-free loan for the tax year 23-24? So basically question 2 pertains to the second paragraph of the scenario. Your time starts now. 3 minutes time to solve the question. In this question, examiner is asking you to calculate the loan benefit. And by the way, loan is interest-free loan, means no repayment is involved. And we have to calculate the loan benefit for the fiscal year 23-24. Let's start reading the second part of the question. An interest-free loan throughout the tax year, throughout means for complete 12 months of the tax year, the balance outstanding at the start of the fiscal year was 24,200, and at year end date, fiscal year end date, it was 19,600. So basically, that's the opening loan liability, and that's the closing loan liability of 19,600. Richard taxable benefit in respect of this loan is calculated using the average method. If examiner has asked any specified method to follow, then please do not perform extra calculation. Although we know that loan benefit is calculated under the accurate method and the average method, and then we select the lower of as the benefit amount. But if examiner has asked you to calculate the loan benefit under any specific method, please do not perform the other calculation. Please do not waste your precious time. So under average method, what we do is that we consider the opening loan liability and the closing loan liability. Loan liability at the start of the fiscal year and the loan liability at the end of the fiscal year, and we divide it by 2, multiplying with the official rate of interest, that is 2.25%. And due to this fact, uh, 12 months are involved. We are taking 12 months time period, and 493 is calculated as a loan benefit under average method, and correct option is D. Majority students perform this question correctly. Congrats. Okay, moving forward, here we go. Here we have the third question of the scenario. By the way, this question is not pertaining to the any paragraph of the question. That's a general question. Your time starts now. 3 minutes time to decide your answer. If you remember from the employment income, if your employer gift an asset, or if you purchased an asset from your employer at a value which is less than the market value. So we are basically talking about two benefits. One of them is asset gift benefit or the asset purchase benefit. Normally we perform method 1 and method 2, and then we select the higher of as benefit. For asset purchase benefit, for asset gift benefit, there are two methods, and the higher value will be considered as benefit amount. If you think till here, two options will be filtered out. that will not be the lower of. Option B and option D are straightforward wiped out, because as we have decided that the method 1 and method 2, the higher of these two methods will be the asset gift or asset purchase benefit. So once you decide this thing, two options are filtered out, option B and option D. Let's decide now from the option 1 and option 4. Option 1 says that the greater of the market value at the date when the asset is given to employee, and number 2, the market value less amounts previously assessed as benefit. And option C says that the greater of the market value the date when the asset is given to employee. By the way, these two statements are exactly the same in A and C. What's the change? If you look at number 2, the market value plus, that's the incorrect thing, plus the amounts previously assessed as benefits. Instead of adding, we must deduct the benefit tax to date. So if here there's a mistake. So that's the reason the correct option is option A. Let me guide you. Under method 1, what we do is that under method 1, we take the market value of the asset and less we deduct the cash paid. In this case, the asset is gifted, not the purchased. Given means the asset is gifted. In gift situation, no cash consideration is involved. So under method 1, the market value will be the relevant amount. And in method 2, we take the cost, and instead of the word cost, here the market value is used. So the market value or the cost can be same, because the date when the asset is purchased by the employer, so the market value of that time will be considered as the cost of the employer. So you can either write the cost or the market value of the asset at that time when the asset is purchased by the employer. From this, we deduct the benefit tax to date. We deduct benefit tax to date, and means because this asset was previously being used by the employer. So that's the reason here we decided the asset is gifted. Where an employer is given an asset, if it is purchased, that will be clearly mentioned that this asset, if it is purchased, then it will be clearly mentioned that employer has paid some consideration. So if it is not mentioned, that's the meaning the asset is directly gifted to employee without any consideration. So that here, from here we decided it's a gift situation. And from the cost or the market value, we deduct the benefit tax to date. Rather adding, we deduct the benefit tax to date. So the differential will be the value of the benefit, and then from this amount and this amount, we will take the greater of or the higher of as the benefit amount. So correct option is option A. I hope now you got your where you went wrong. Now I guess that's now clear. Okay, moving forward, here we have the fourth question of the scenario. Your time starts now. In question 4, what is Richard's taxable benefit in respect of the home entertainment system for the tax year 23-24? That's pertaining to the last pair of the question. A home entertainment system since 1st November 23. 1st November 23 is the date which is during the fiscal year date, and fiscal year will end on 5th April 24. If an asset is provided on this date, for how many months employee would be using? The month of November, December, Jan, Feb, March 24. So in fact, a 5 months time period is involved. The entertainment system cost 5160 and it's provided for Richard's personal use. When an asset is provided to employee for personal use, then the asset usage benefit is calculated. For the calculation of asset usage benefit, we must take the cost of asset, multiplying it with the fixed percentage, that is 20%, and also to month portion. And there are 5 months which are involved during the tax year. The asset is being used for 5 months only. So 5160 into 20% into 5 upon 12, that's giving us a value of 430. So there's a taxable benefit in respect of the home entertainment system. Correct option is option B. If any one of you have any query, unclarity, discussion point, please do let me know. I am here to guide you. It's not like that we are just solving, and it's not a one-way communication. If you have any question, unclarity, any one of you, you may please ask. You are invited to ask your questions and to make your mind clear. If we all are okay, we can move forward. Can you please write if this is fine? Can we move forward? If you have any query and clarity, please ask. Okay, perfect. Moving forward towards the last question of this scenario, here we have question 5. It's not have any link with any part of the question. It's a general question. Which of the following benefits can never be exempt? Examiner is asking you to identify that which of the following benefits will never be exempt. Examiner is asking you to identify that which of the following benefits can never be exempt. So correct option is option C, health club membership. If this amount is paid by employer, that will always taxable benefit. It can never be exempt. While rest of the others benefits may be exempt, but how? Let's discuss. Meals in staff canteen is exempt if it is available to all employees. I'm also guiding you to other options as well. If available to all employees, then it will be exempt. Work from home allowance, that's exempt up to £6 per week or £26 per month. Whereas relocation cost is exempt up to £8,000 and excess is taxable. For option A, B, and D, these benefits are exempt in some circumstances. To some extent, these are exempt, but health club membership is never an exempt benefit. So option C is the correct answer for this question, and majority have selected it. Okay. Now we have another question. It's not linked with any scenario. It's a general question. We have question 6 in front of us. I would appreciate if you please start attempting 3 minutes time. Your time starts now. This question is basically from individual person capital loss adjustment. SOM, it's simply written as SOM. It's not SOM limited. If it is SOM limited, then this question would be pertaining to companies, right? But question data says that for the tax year 23-24, SOM has chargeable gain of 23,900. For which tax year these are the gains? For the tax year 23-24. She has unused capital losses of 26,100 brought forward from the previous tax year 22-23. So there is a previous year capital loss, and for current year we have capital gains, but the requirement is not for previous or current year. Requirement is for next year. What amount of unused capital loss will SOM carry forward to the tax year 24-25? So as we are having 3 different fiscal years involved, so I'm writing these one by one. Fiscal year 23-24, 22-23, and fiscal year 24-25. There is a capital loss for this tax year and the amount is 26,100. For this year, there is a capital gain of 23,900. As we know, one thing that previous year capital loss can be adjusted from next year gains. So previous year capital loss is brought forward to next year, but over here we have studied that we should try to preserve the annual exemption. Why we should preserve annual exemption? So what's the impact on the losses adjustment? We will try to adjust an X amount of loss from 23,900. We must deduct an X amount of loss. So the differential will be of 6,000. That's the reason we would be taking the annual exemption of 6,000 because we have to preserve this annual exemption. For preserving this annual exemption, we can reduce, we can restrict the amount of the losses adjusted. So can you please identify what will be the X amount for from 26,100, how much loss is to be adjusted from here? So the differential will be equal to the annual exemption. So we are preserving annual exemption. We are restricting loss adjustment. Can you please tell me the amount? I guess that's 17,900. If from say 26,100, if a loss is adjusted to the extent of 17,900, so what is the loss amount which can be carried forward to next year? So the differential of 8,200 can be carried forward to next year. Correct option is option C. Your clear concepts for surely will be helping out you to decide your answers. So as we have studied in the capital gains of the individuals, that whenever there is a loss amount of previous year and it is adjusted in the current year, so we will try to preserve the annual exemption of the current year. So for the current fiscal year 23-24, we preserve the annual exemption, we use it in full, and we restrict it. So here the loss amount is a balancing figure. From 26,100, this loss amount is adjusted, and remaining loss can be carried forward and can be adjusted from the next year capital gains. So that was our requirement. The next question is, I'm sharing my screen. Your time starts now. Again, it's from the capital gains of individuals. It's Alistair's. It's not Alistair Limited. It's not the company question, and it's about the Alistair's capital gain tax liability. The means the capital gains of individuals. 3 minutes time. For the tax year 23-24, A's taxable income is 34040, and during the year he sold an antique vase, and this resulted in chargeable gain of 33,900. Directly, the gain amount is given on the disposal of an asset, and the requirement is to calculate the capital gain tax liability for this tax year. Few students have made mistake here. They have considered it as taxable gain. It's not taxable gain, it's chargeable gain. For the fiscal year 23-24, we have chargeable gain given as 33,900. If no other disposal is there, from the chargeable gain, we deduct the annual exemption of 6,000. Thereafter, the taxable gain is calculated, is computed, and taxable gain for this question is 27,900. But the requirement is to calculate the tax liability, not the taxable gain. Few students have not deducted the annual exemption. They considered this gain as taxable, right? So that's not the taxable, that's the chargeable gain. From chargeable gain, we deduct the annual exemption to arrive at taxable gains. Next thing, basic rate band limit is 37,700, and firstly, it is covered by the taxable income. The taxable income which is given in the question is 34040. So to this extent, the band limit will be covered first. On a first priority, taxable income covers this band limit. And the difference is 3660, means from the total taxable gains, to this extent, the gains will be subject to tax at basic rate, at the lower rate, and the differential and the excess gains will be taxed at higher rate. From 27,900, first 3360 gains are falling in the basic rate band limit. They are subject to tax at lower rate of CDD, and 3660 is the liability. Whereas from 29,700, if we deduct 3660, the difference is 24240. On these gains, the high rate is applicable. The high rate of CDD is 20%. So 24240 into 20%, that's giving us a value of 4848. The sum of these two, 366 and 4848, is 5214, and 5214, correct option is option A. Nothing is given in question useless. This thing is used over here. From the basic rate band limit, taxable income cover this band limit, and remaining band limit can be covered by the gains amount. From the total gains, these gains are falling in the basic rate band limit. They are subject to tax at lower rate of CDD, whereas the differential gains will be subject to tax at higher rate of CDD. So the total tax liability will be 5214 for this question. I hope everyone who have made mistake, who have selected incorrect answer is now crystal clear on this. Okay, perfect. From total taxable gains of 27,900, if 3660 is falling in the basic rate band, so the difference of these two from 27,900, if we deduct 3660, the difference will be 24240. Here we go. Here we have the next question in front of us. This question is from company's chargeable gains, company's capital gains, and requirement is what is D Limited's chargeable gain in respect of the disposal of the factory. D's chargeable gains in respect of the. If you remember the concept of indexation allowance, indexation allowance is added to the cost of asset, but for those assets which purchased before 31st December 17. So this asset is being purchased on 4 July 1999. So this date is before 31st December 17. So when this asset will be disposed, indexation allowance will be added to the cost of the asset. Keeping this thing in mind, you can start attempting next question, this question. All right. D Limited sold a factory on 7th Feb 24 for 260,000. The factory was purchased on 4th July 1999 for 114,000. This purchase date is before 31st December 17. So when this asset will be disposed, index cost will be calculated and deducted from the disposal amount. And for the calculation of indexation allowance, index factor from purchase date till December 17 is given in the question as 0.766. Record the disposal proceed. Asset is disposed for 260,000. Asset is purchased for 114,000 in July 1999. In this cost, we are adding indexation allowance. And how we can calculate the indexation allowance? Index factor is given as 0.766 multiplying with the expenditure amount. And expenditure amount is the asset purchase cost. So indexation allowance 0.7666 0.766 into 114,000. Indexation allowance is calculated as 87324, and the sum of these two is the indexed cost. When the indexation allowance is added to any cost, the resulting cost is the indexed cost. Index cost is 201324, and difference is the gain amount. The chargeable gain for the company's factory disposal is calculated as 58676. D is correct answer, and majority have selected it correctly. Here we go with the next scenario. Jade is a person name. It's not Jade Limited. It's about a person. Jade sold 25,000.1 ordinary shares in Silver PLC on 13th March 24. That's in the fiscal year 23-24. Jade had purchased 60,000 shares in Silver PLC on 18th Feb 2015 for 72,000. And after acquiring these shares, thereafter on 24th May 18, Silver PLC made 1 for 4 bonus issue. What cost figure will be used in calculating the chargeable gain on the disposal of 25,000 ordinary shares in Silver PLC? If you remember, for calculating cost of the shares, we have to follow the matching principle. If the shares are for same company, then cost is calculated using the matching principle. And if you remember further, for matching principle, there are 3 steps. First of all, we consider the same day purchases. Same day is the disposal day. The shares are disposed on 13th March 24. We need to check whether any shares are purchased on same day. No shares are purchased. And for individual persons from the same day, then we consider next 30 days from the disposal date till 13th April 24. If any shares are purchased, no next 30 days shares purchases are given. And the last step, the remaining shares can be considered from pool. And how many shares we require from pool? The entire shares, 25,000 shares are now would be taking from pool. and we don't know that what is the pool amount, and because the pool shares are considered on weighted average amount. So let's start preparing the pool. Shares pool, number of shares and the value of shares. Firstly, the shares purchased on 18th Feb 2015. How many shares are purchased? 60,000 shares are purchased for 72,000. Thereafter, thereafter on 24th May 18, there is a bonus issue of 1 for 4. This bonus issue fraction is applied on the existing number of shares. So if you multiply 60,000 into 1 upon 4, 15,000 number of shares are calculated. By the way, these are the bonus shares. Bonus shares have no impact on the cost. Total shares are 75,000, whereas the total cost is 72,000. From the pool, we consider the shares at weighted average cost. And if you want to calculate the weighted average cost per share, so let's divide the total cost to the total number of shares. The weighted average cost is calculated as 0.96. Means the shares which we require from pool, they are going to multiply it with the weighted average cost, and 25,000 into 0.96, that's giving us a value of 24,000. So that is the cost element which will be used for finding the chargeable gain. So the total cost for these 25,000 shares is 24,000. B is the correct answer. I hope everyone is crystal clear on this. Okay, moving forward, again, we have a question from the capital gains of individuals, and the requirement is which disposal could qualify for investors' relief. And for claiming investor relief, there is a condition that the share must be of unquoted trading companies. All of these shares are from of the unquoted trading companies. So the basic condition for investor relief is met for all the shares disposal, but we need to decide that which of the following four will qualify for investors relief. There are certain other conditions apart from the shares of unquoted trading companies. There are certain other conditions which must be met as well. Your time starts now. Okay. If we talk about investors relief, Adil, your answer, by the way, is correct. If we talk about investors relief, there are some conditions attached before claiming the investors relief. Let me write all of the conditions one by one. The share must be of unquoted company shares, unquoted trading company shares. So this precondition is met because all of these shares are disposed from the unquoted trading companies. So this condition is basically met for all of these shares disposed. The other condition is that shares acquired through subscription from company, not from any shareholder. If we follow this statement, two options are filtered out. What are those? You can see in option A, shares purchased from a shareholder. In option C, shares from a shareholder. Why? Because for the shares disposal, if you want to take the investors relief, those shares must be acquired through subscription from company and not from the shareholder. If you follow this statement, two statements are wiped out. Now we have to decide from option B and D what is correct. Let me write other conditions as well. Shares must acquired after Shares must acquired after 17th March 16. The shares on which you want to claim the investors relief, those shares must be purchased after 31st March, after 17th March 16, and held for at least 3 years from purchase date. If we talk about these two conditions, option B says that shares are purchased in June 20 after 17 March 16, and option D suggests that shares is subscribed from company in August 21, in effect after 17th March 16. But if we talk about the other condition, these shares are disposed of in March 24. If we check the time period from June 24, the purchase date, 3 years will end on after 3 years, the date will be June 23. And if we check same 3 years rule, the date will be August 24. Because if you purchase shares in August 21, then 22, 23, 24, August 24 is a 3 years holding period. But if you check that these shares are disposed during March 24 and these shares are disposed in March 24, holding period, 3 years holding period is ending on June 23 for B, and 3 years holding period is ending on for these shares in August 24. Whereas option B is correct because 3 years are completed on June 23 and you are disposing shares in March 24. But for option D, 3 years will complete on August 24 and you are disposing these shares before the completion of 3 years time period. So that's the reason option D is not the correct option. Hope this is now clear. By the way, there is also another condition that the person must not employ of the company. Although this condition is not relevant for this question because it is not mentioned, and examiner has asked you to identify that which disposal can qualify for investor leave based on the data available. We can say that the shares which acquired through subscription on June 20, the disposal of such shares will qualify for investor leave because this is meeting all of the conditions because these shares are of unquoted trading company. These shares are acquired after 17 March 16 and held 3 years at least from the disposal date. And if the shares 3 years completed on June 23 and disposed in March 24 means they are disposed after 3 years time period. So can you please tell, are you clear on this? The students who have made mistake, are you clear on this? Your active responses are highly appreciated. If you selected your answer incorrectly, I hope that's now clear. From here you can note that for deciding everything you need to work very clearly, very smartly. You need to check each and everything one by one on each statement, then decide your best answer based on the discussion points. Moving forward, here we have another scenario, and this scenario relates to question 11 to question 15. And the scenario is, by the way, please do not read this question. I would appreciate if you please start reading the scenario and take 3 to 4 minutes time and read this scenario thoroughly and religiously because next 5 questions will be based on this scenario. Your time starts now. 4 minutes time to read this scenario. All right. The scenario relates to the question 11 to question 15. J disposed of various assets during the tax year 23-24. J is an individual person who made multiple disposal in the tax year 23-24. And this disposal resulted in chargeable gains of 46,400, which qualified for business asset disposal relief. Directly, the gain amount is given, and the gains of 46,400 are those gains which qualified for business asset disposal relief. Remember, any gains which qualify for business asset disposal relief, they are straightforwardly taxed at 10% regardless of the status of taxpayer. And another gain of 123,300, these are the gains which are not qualified for business asset disposal relief. Any gains which are not qualified for business asset disposal relief, the tax rate, the capital gain tax rates on such gains will be decided upon the status of the person, whether a person is a basic rate taxpayer or high or additional rate taxpayer. But any gains which qualified for BADR, they are straightforward taxed at 10%. None of the gains are residential property gains. It is very clearly mentioned that none of the gains are pertaining to residential property because residential property gains are subject to tax at 18 or 28%, but no gains are pertaining to residential property disposal. J's disposal include the following. The gains which have already been calculated, these are based on the number of transactions, and about those transactions, different paragraphs are given in question. Number one, on 19th April 23, J sold 5 hectares of land for 72,000. He had originally purchased 8 hectares of land on 7th June 14 for 68,000, and the market value of the unsold 3 hectares of land on this disposal date, when the 5 hectares are disposed on the same day, the remaining 3 hectares value is 40,500. So this number 1 is pertaining to question 11. What cost figure will have been used in the calculating the chargeable gain on the disposal of J's 5 hectares? Basically, the cost of parts sold concept is applicable here. The cost of parts sold is calculated as, why? Because the cost element is asked that what is the cost of the 5 hectares which are sold, find that cost. So cost of parts sold is market value of the parts sold divided by market value of the whole asset. For checking the market value of whole asset, we shall be taking the asset disposed and the remaining asset, both the values are added together and multiplying with the original investment. Originally 8 hectares are purchased for 68,000. So that's the formula: market value of the part sold divided by market value of the whole asset multiplied by the original cost of the 8 hectares once purchased. The cost of 8 hectares was 68,000. If you solve this fraction, you will get a value of 43520. So all of the majority students have selected their answer correctly. 43520 is the cost of parts sold, which is being used in the calculation of the chargeable gain. Other transaction is on 8th June 23, J sold an antique table for 128,000. If you remember antique table, what are the relevant points to remember about antique table? It's such assets. These are antiques and having life more than 50 years. So such assets are non-wasting. And it's a table, it's a tangible and movable asset. So it's a non-wasting chattel. And if you remember, for non-wasting chattel, there could be 4 situations at time of disposal. The disposal proceed and the cost both can be less than 6,000, both can be more than 6,000. Either of them can be less or more than 6,000. So we need to check that what is the scenario on the disposal of a non-wasting chattel. Moving forward towards the next question, and the requirement of this question is, what is the chargeable gain on the this in chargeable gain in respect on the disposal of antique table? So your time starts now. Disposal value is more than 6,000. DP is more than 6,000, whereas the purchase cost is less than 6,000. So that's lead towards situation 4. And if you remember situation 4, you can easily attempt. Yes, that's about 5/3 rule. Ikra, your answer is correct. Again, I would request you, if you are struggling in any question, you can take help from your notes. Riva, your answer is correct. Very good. It's a non-wasting chattel. It's a non-wasting chattel, and it's for this non-wasting chattel, situation 4 is applicable. Why situation 4? Because disposal proceed is more than 6,000 and cost is less than 6,000, and situation 4 suggests that the lower of will be the gain amount. The lower of what? The lower of normal gains, or the 5/3 rule. Normal gain, how we can compute? The asset is disposed for 12,800 and cost of the asset is 1,300. 11,500 is a normal gain amount. Whereas if we start applying the 5/3 rule formula is 5/3. Disposal proceed minus 6,000. The difference is 12,800 minus 6,000 into 5 divided by 3. So that's giving us a value of 11,333, and then lower of will be the gain amount, and we have selected option A as correct answer. Thanks for your active participation. Majority students have selected their answers correctly. So this is how you have to use your mind in your exam questions. Please don't hesitate, don't confuse, take your time. You have 3.6 minutes time to solve each question, and try your best. Try to link the scenario with the concepts you have already studied. And let's start reading the other part of the question. It's about number third. On 19th November 23, Jay made a gift of his entire shareholding of pound one ordinary share in AMZ PLC to his son. Son is a connected person, and any shares which are transferred to connected persons, any asset which are transferred to connected person, the disposal must be recorded at market value. On the day of transfer, on the day of gift, the shares were quoted at 10.20 to 10.64. By the way, this is uh this is a quoted company. How we can identify that's a quoted company? Because it's a public listed company. If it's a public listed company, so that is a quoted company, and quoted company shares market value can be found by using the two methods, and both methods will be giving you the same value. If you remember the concepts, any asset which is transferred to connected person in capital gains, if any transfer is in between connected person, the disposal proceed would be equal to market value. And for finding the market value of quoted company shares, there are two methods: the average of ask and bid price, and the half of bid price. So you can use any of these two methods, and both would be giving you the same value. So if you remember this, you can easily solve. Very right. Very good. Very good. You guys are really fantastic. Have already been solved the question. What market value figure will have been used in calculating the chargeable gain on Jay's gift of AMZ PLC shares to his connected person? Yes, true. Correct answer is option C. How you solve? You majority of the student, they do prefer to use the average method, and the average of ask and bid price is 10.20 plus 10.64, and divide it by 2, average it out, and you will get 10.42. So that's the market value of each year which have been used in calculating the chargeable gain. So C is the correct answer. Very good. Okay. Reading the next scenario, on 10th March 24, Jay sold a factory, and this disposal resulted in a chargeable gain. This date is what important for us for next question. Can you please recall about the qualifying reinvestment time period? If you want to take any rollover or holdover relief, there must be a reinvestment concept and the reinvestment time period. Can you please write what is a qualifying reinvestment time period? Any one of you, please. If you want to claim any rollover or holdover relief on the disposal of a business asset and buying the other business asset, this reinvestment must be take place in a qualifying reinvestment time period. Thank you, Samra. That's 48 months. But how these 48 months will be checked? Let's move forward towards the next question. Musa, your answer is also correct. Ikra, your answer is correct. Now read the actual question. During what period must reinvestment take place if J wishes to claim rollover relief in respect of the chargeable gain arising on the disposal of factory? Factory disposal date is 10th March 24, and the total qualifying reinvestment time period is of 48 months. But these 48 months are of 12 months before disposal, previous 12 months, and 36 months after disposal. So if we check, that will be 10th March 23. And if you move forward 36 months from 10th March 24, the first year will be 10th March 25, 10th March 26, 10th March 27. So 10th March 27 will be the date which is after 36 months. So based on these discussion points, we can say that if the person has disposed any asset on this date and want to claim the relief, then the reinvestment must be made in between these two dates. And both of these dates can be found in option C, 10th March 23 to 10th March 27. So that's tantamount to total qualifying reinvestment time period. Correct option is option C. No, okay, okay. No worries, Musa. Last question of this scenario is very important and very crucial, and the majority students would be struggling in that. But take this as challenge and try to attempt. Basically, next question is pertaining to this paragraph. So you guys are requested to read this paragraph and read the requirement very carefully. Requirement is simple. What is a J's capital gain tax liability for the tax year 23-24? All of the gains which qualified for BADR are not qualified for BADR. They are given in the first para. Based on this, you can easily solve this question. Here we have these gains are qualified for business asset disposal relief, and these gains are those which are not qualified for business asset disposal relief. Plus, J does not have any taxable income for this tax year, means his basic rate band limit is available, and that can be covered by the gains. What is J's capital gain tax liability for this fiscal year? I'm moving towards the next page. Here we have a column. For example, we have residential property gains, and residential property gains are taxed at 18% or 28%. And if we have gains which are non-business asset disposal relief gains, non-BADR gains, these gains are subject to tax at 10% or 20% based on the status of person. And the gains which qualified for business asset disposal relief, they are always taxed at 10%. And in this scenario, what is given, the gains which are given for chargeable gains are given. No residential property gains are there, but 123, 200 are the gains which are not qualified for business asset disposal relief, and 46,400 are those gains which are qualified for business asset disposal relief. From the chargeable gains, we can deduct the annual exemption. And by the way, if annual exemption is now to be deducted, it will be deducted from that column which may be subject to tax at higher rate. So we will try to reduce the amount of this column and will not deduct the annual exemption or the brought forward loss from any other column. And if, let's say, if any residential property are gains, then annual exemption will be deducted from this column, right? After deducting the annual exemption taxable gains for this column, can you please write the amount? From 123 200 minus 6,000, the differential is 117,200, and for the remaining column is 46,400. If we decide the capital gain tax rate for BADR column is 10%. This is not based on the status. This is due to the business asset disposal relief. And but for here, maybe 10%, maybe 20%, we don't know for the time being. The resulting amount will be the capital gain tax liability. And that will be the sum of these two amounts, because in this column there is no amount, and that is 46,400 multiplied with 10%, that is 4640. The decision point is whether we should apply 10% or 20% on 117,200. Now be with me and try to recall basic rate band limit. Basic rate band limit is 37,700. Firstly, it is covered by the taxable income, but it is very clearly mentioned in question that person does not have any taxable income for this tax year. Means the gains, there is no taxable income. Means the limit is available to cover the taxable gains. But when the gains are categorized into different categories, so what type of gains will be now the covering the band limit? If we start discussing about the taxable gains, which they will be covered, then 2A, on a 2A priority, the gains which are BADR gains, they will cover this band limit. And then on a second priority, the normal gains will cover this band limit. And on a third priority, the residential property gains will cover this band limit. But as you can see from the scenario, as it is evident from the scenario, we have BADR gains of 46,400. So BADR gains have already covered this limit and there is no limit available to cover this amount of gain. It means now the person status is a high rate taxpayer, and any person who is a high rate taxpayer, then the capital gain tax will be 20%. So 117,200 is multiplied with the tax rate of 20%. So 23440 is a resulting amount. And if you add both these values, that total CGT liability will be calculated as 28280 23440 plus 4640. That's 28080. Any option available? 28080. I'm not getting this answer. The students who have attempted it, can you please check what the mistake we are making? Taxable gain amount, it's 117,300. Okay, I guess I have, okay, that's 123,300. It's 123,300. Thank you. Minus 6,000 exemption, that's 117,300. And if it is multiplied with 20%, that is 23460, then 4640, and 28,100 is the corrected amount. 28,100. Thanks, Ikra. Thanks for correction. 28,100 is the capital gain tax liability, and B is the correct answer. For solving a simple question, you must follow a detailed working, and based on that working, you can identify your correct answer. So if you have forget such things, you have to mark, you have to open up your notes and then recall the relevant area and then attempt this question again. You will be more clear on this. Okay, moving forward. Here we have the next question. It's an isolated question, not linked to any scenario. Question 16, your time starts now. Again, I can tell you that's a very important question and majority of the students would be making a mistake over here, but please try to avoid that mistake. Your time starts now. Okay, let's start discussing this one. X Limited owns 90% ordinary shares of B, and then B Limited turn owns 70% ordinary share capital of C, and then company C owns 100% ordinary share of D and 80% ordinary shares of E. Let's make the structure. And requirement is, along with B Limited, which companies form a chargeable gain group. We have studied about the capital gain group. Those companies can be part of capital gain group wherein the direct shareholding is more than 75% and indirect shareholding is more than 50%. But first we need to check whether the direct shareholding condition is met. If this is met, then we will further move on to check the indirect shareholding condition. If I start preparing this, company A owns 90% share capital of B. So that's the reason it is very clearly mentioned in that along with B Limited. Means the direct shareholding in between A and B is met. What other companies are making the form are the part and parcel of the capital gain group. If we check, my dears, be with me very carefully, listen very carefully. Company B owns company C, and how much shares 70% of C. If we check the direct shareholding condition in between the B and C, so that's not met. If it is not met, if the direct shareholding condition is not met, then we will not further move on to check whether what is the shareholding in company D and what is the shareholding in company E. Even if it's more than 75, is still it will not work for us. How? Because the relation of B and C is not meeting this condition. If the direct shareholding condition in between the B and C is missed out, then we will not check the indirect shareholding, right? So we can say that no other companies will be there in the capital gain group because the direct shareholding condition is missed out in between the company B and company C, because company B owns company C and this shareholding is less than 70%, is less than 75%. So if the direct shareholding condition is not met, we will not move on for further checking the indirect shareholding. it, let's say if instead of 70%, I'm changing this percentage. If it is given as the company B owns company C as 80%, then we will check indirect shareholding by multiplying these two percentages, because then the relationship between B and C is meeting the direct shareholding condition, because the shareholding is, if we suppose that B owns 80% of C, then we will check the indirect shareholding. But as over here, the relationship in between B and C is less than 75, so direct shareholding condition is missed out. That's the reason company D and company E, no other company, up only A and B will form the capital gain group and no other company. Are you clear on this? Majority students have not answered on this, but as I have guided you, is that clear now? Please, I want respond from all of you. If the scenario is changed, let's say if company B owns 80% or 90%, any percentage which is more than 75, then we will start checking about the indirect. Okay, perfect. Okay, another question from the corp. My dear Judy, please listen carefully. First of all, we must check the direct relation in between B and C. If the direct shareholding is not meeting, then we will not consider the indirect shareholding. The direct shareholding of company B in company C is 70%, which is not meeting this condition. Thank you, Seth. Judy, are you clear on this? Okay, moving forward. Here we have how much Blue Limited's trading loss can Green Limited claim against its taxable total profits for the year ended 31st March 24. Basically, this question is from the group loss group. And group loss group companies are those companies. Okay, you are asking that how we can calculate. For example, let me guide you. For example, B owns 90% of C, then how we can check the indirect shareholding? Then we can check the indirect shareholding by multiplying these two percentages. It will be 90%. And then indirect shareholding 90 into 80%, that's 72%. So this is how we can check the indirect shareholding. But first, this direct shareholding condition must be met. Then we can check indirect shareholding by multiplying both the percentages. Is that clear now? Although this is not the scenario, but I just guided you. Okay, thank you. Okay, for group loss group, there is a concept that group loss, the companies which are there in group loss group, they can adjust their loss with other group companies. But there is a concept that the loss must be of corresponding time period. Corresponding, or you can say it as similar time period loss. similar time period loss can be adjusted. But this similar time period loss can be adjusted according to the lower of concept, lower of the gain amount, the profits amount, or the loss amount. By keeping this concept in mind, you can attempt this question. Your time starts now. For group loss group companies, there is a precondition that which companies can form group loss group. Any companies wherein the direct and indirect shareholding is of more than 75%. So those companies can be part of group loss group and can transfer their loss to each other. The company which has lost that to and want to adjust this loss to other companies, such companies will be the surrender company, and the company who has profits and want to claim other companies' loss, that is a claimant company. So in the group loss group, there are two companies: company with a loss, that is surrender company; company with a profit is claimant company. So Green Limited owns 100%. So precondition is met. Direct or indirect shareholding must be of more than 75%. So this condition is met. Green Limited owns 100% ordinary share capital of Blue Limited. And for the year ended 31st March 24, for the year ended 31st March 24, Green Limited year end date is 31st March 24, and this time period is ending for after completing 12 months time period. Green Limited has taxable profits of 132,000, and for 9 months period ended 31st December 23, Blue Limited has a trading loss of 84,000. So in the group loss group, there are two companies. One of them is Green and one of them is Blue. Green time period is of complete 12 months time period, and blue time period is ending after 9 months time period, right? So green results are for year ended, and year end date is 31st March 24. In effect, it is started on 1st April 23. And the other company year end period end date is 31st December 23. And in fact, if it's a 9 months time period, it is also started on 1st April 23. So can you please find the common months? The common months are in between these two companies are 9 months. Both the companies starting date is 1st April 23, but this company is preparing accounts for 12 months time period. The other company is preparing accounts for 9 months time period. So the common month for both the companies is 9 month common. So we have found that 9 months is a common time period. And for 9 months, this company has a loss of 9 months loss is 84,000. It's a 84,000 is a loss of 9 months, and the other company having 132,000 as a profit for the year ended. So this is a profit for complete 12 months time period. So if the common months are 9 months, so we have to break this 12 months profit into 9 months profit. So can you please check that if 132,000 into 9 upon 12, so 99,000 is a profit for 9 months. From the total 12 months profit, we have calculated 9 months. And 9 months profit is 99,000 and 9 months loss is 84,000. To what extent the loss can be adjusted to the lower of, and lower of these two is 84,000. So 84,000 is the correct answer. I hope the students who have made a mistake, they are now clear for this concept. Would appreciate your active responses. Thank you, Usad. Okay, moving forward, another question, and that's also from the group loss group. All of the things can be adjusted in group loss group except of one thing. So that is asked in the question. Which of the following cannot be surrendered as part of group loss group? Which of the following cannot be adjusted in group loss group? Very easy question. Reva, your answer is correct. All of the things can be adjusted in group loss group except of one from the four. Judy, your answer is correct. Very good. Perfect. Musa, correct. Samra. Who said true? Capital gains or capital losses cannot be adjusted in group loss group. Rather, they are adjusted in capital gain group concept. So in the group loss group, companies can transfer each and every loss except of capital losses. The companies which are there in the group loss group, they can transfer each and everything to each other except of capital losses, because for capital losses there is a separate concept named as capital gains group. So capital losses will be adjusted with those companies which are there in the capital gains group. Please attempt this question. Okay, I'm starting this question. Requirement is, what is the maximum amount of group relief which can be claimed by S Limited? As a few minutes ago, I guided you in the group loss group. There are two companies. One is surrender company and other one is claimant company. And claimant company is that company which has profits. Surrender company is that company which has losses. Surrender company is a company which want to surrender its loss to other companies. And claimant companies are those companies which want to take the other company's loss to be adjusted from its own profits. So in this question, the question is asked for the claimant company. If you read from here, what is the maximum amount of group relief that can be claimed by S Limited? So for surely S Limited will be having a profits in this situation and would be claiming the other company's loss with its profit for the year ended 31st March 24. So S Limited owns 100% of the ordinary share capital of these several loss-making companies. This company has 100% ordinary shares, means this condition is met for group loss group, because for GLG, those companies will form a group loss group wherein the direct and indirect shareholding is of more than 75. So this 100% suggests that all of the companies are there in the group loss group. S company's results for the year ended 31st March 24 are given. And as I guided you that capital losses are ignored for group loss group purposes. So except of this, can you please check that how much amount is available for S company by adjusting its own losses with itself? Firstly, S company will adjust its own losses and gains with its own values amounts. And for a company, interest is receivable, interest is recorded on accrual basis. So this is to be considered as interest income for the company. The loan interest receivable in respect of a loan which was made for 9 months was for non-trading purposes. So for a company, interest is always treated on accrual basis. So this 2900 is actual amount. This amount is considered as income for the company. So if you are S company and you have trading loss, you have property income, you have loan income, interest income, and you have QCD. So first of all, your own results will be adjusted with your own self. If you net of all these values, you will get 47,700 after adjustment with your own income and losses. Your remaining profits are 47,700. So that's the correct answer. Of Let's say I'm company S, I have my own profits, I have my own losses. So first of all, my income and losses will be adjusted with each other. And afterwards, we will check that how much profit is available, to what extent I can take the other company's loss. So I have, after all my adjustment with myself, still I being S company having 47,700 profits. And to this extent, I can claim the other company's loss. So correct option is option C. Is that clear, everyone, please? To the extent of 47,700, company S can take the other company's loss and can be adjusted with its profits, with its remaining profits, by the way. Everyone is clear, please? Okay, moving forward. And here we have, your time starts now. At least read the scenario religiously and thoroughly. Let me guide you with respect to the concept asked in this question. The companies which are there in capital gain group, those companies can adjust their, the companies which are there in capital gain group, they can adjust capital gain and capital loss with each other. companies in capital gain group can adjust capital gain and capital loss with each other, but this decision is to be made in a specified time. So what is that time? 2 years. That time is 2 years from the end of the accounting period. Okay. Am I guiding you? The companies which are there in the capital gain group, they can adjust their capital gain and capital loss with each other. And this decision is to be made within 2 years from the end of the accounting period, in which assets are sold. By keeping this statement in mind, let's read the scenario. CAT Limited owns 100% of the ordinary share of Mouse Limited. This shareholding is meeting the percentage for capital gain group. Both the companies are in capital gain group. Both companies prepare account to 31st December. The year end date for both the companies is also similar. On 10th June 23, Mouse Limited sold an office building and this resulted in a chargeable gain. Who sold this office building? Mouse sold this office building and resulted in a chargeable gain. And in the same year, during the year ended 31st December 23, CAT Limited, the other company, disposed of factory building and this resulted in a capital loss. Both the companies are in capital gain group. Yes, because based on the shareholding, we can say that both the companies are in capital gain group. And no, it's not. As you have shared your answer, Musa, that's not correct. And both the companies are in capital gain group, and one of the companies sold an asset resulted in chargeable gain. The other company sold an asset which resulted in a capital loss. Both the companies are in capital gain group and they can adjust their capital loss and capital gains with each other. But this decision is to be made from 2 years from the end of the accounting period. So first of all, what is the year end date? 20th November 23 year end date will be 31st December 23, and 10th June 23 year end date will be 31st December 23. So first of all, we must select the year end date 31st December 23. And from this year end date, from the accounting end date, if we start counting 2 years time period, that will end on 31st December 2025. So what we can say is that correct option is option A. If both the companies are there in capital gain group and both the companies have capital gains and capital losses to be adjusted, they must make an election. This election is to be made within the 2 years from the year end date in which the assets are sold, and the relevant date for this question is 31st December 25. Thank you, Seth. So that was the reason I am conducting this revision session, and we are doing practice questions, because multiple things which are not covered till now, they are now being covered in this manner. Okay, my dears, I'm keeping till here, and we will start doing further practice questions in next session. Take care.